Hi, and welcome back to the Food Fund. In this video, we will be recapping the portfolio performance for March 2026. It was another tough month for the portfolio, so be sure to watch through the end of the video to find out how the portfolio got destroyed. Let's jump right in. Key the logo. Let's start off with the market's performance. For the month of March, the S&P 500 fell about 5%. When we look at the companies that make up the S&P 500, we can see a lot of red. Microsoft, Nvidia, Apple, Amazon, Alphabet, and Meta all fell. Over in our corner of the market, only farm products companies gained, while all others fell. It was a bad month for stocks all around, but how did our portfolio fare? Okay, let's move on to the portfolio performance. I deposited $100 into the account on March 1st, 2026, and at the end of the month, the portfolio balance was $1,855.53. This means the portfolio lost $265.32 for the month, representing a 12.5% loss for March. This was the largest loss in terms of both percentage and total dollar amount. Ouch. Given the S&P 500's 5% decline, we lost 7.5 percentage points of alpha by following our strategy and not being invested in the S&P 500 this month. Our streak of outperforming the market has come to a close at just 3 months. Looking at our performance chart versus the S&P 500, we see that the beginning of the year showed promise, but March quickly dashed our hopes of catching up. Since inception, the portfolio has had a minus 12.9% CAGR on a money-weighted basis, while the CAGR on a time-weighted basis was minus 6.8%. Given the S&P 500's 10.6% CAGR, the portfolio trails the S&P 500 by a 23.5 percentage point CAGR since inception. We are trailing by a lot since inception. There is no comeback to be seen. Yet. Let's take a look at the portfolio holdings. Before we jump to that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund.
Also, don't forget to turn on your notifications if you are watching on a mobile device. Okay. So we have a new king of the portfolio. Wingstop is now the largest holding, with 2.91 shares at a cost basis of $187.03. This position is down 17.1%. Wingstop makes up a whopping 24.3% of the portfolio. I basically pushed the extra cash I had into Wingstop, with poor results. Next, Pepsi. The beverage and snack juggernaut is my number 2 holding, with 1.6 shares at a cost basis of $134.48. This position is up 15.5%. Pepsi makes up 13.4% of the portfolio. I haven't really added to this position in a while, but the March retreat for growth proved beneficial for this holding. Now, Celsius. Celsius is now my number 3 holding, with 6.53 shares at a cost basis of $30.63. This position is up 15.9%. Celsius makes up 12.5% of the portfolio. Once my largest holding, Celsius remains an important part of the portfolio, and I will still add to the position on strong pullbacks. Luckin Coffee is my number 4 holding. My Luckin Coffee position has 7 shares at a cost basis of $34.30. This position is down 6.4%. Luckin makes up 12.1% of the portfolio. I haven't added to the position here, and I'm looking for a big drawdown to take advantage of. Dutch Bros is next. Dutch Bros is my number 5 holding with 2.31 shares at a cost basis of $47.67. This position is up 6.3%. Dutch Bros makes up 6.3% of the portfolio. I managed to average down in this position and will continue to do so given any opportunities. The growth of this company has been tremendous and their leadership is strong. My only regret is not having bought more. Next, Texas Roadhouse. The steak restaurant is my number 6 holding with 0.64 shares at a cost basis of $162.05. This position is up 1.9%. Texas Roadhouse makes up 5.7% of the portfolio. This has been the most stable holding in the portfolio. I would like to get my position up above 10% of the portfolio, so I have a lot of buying to do. Now Chipotle. I have 1.49 shares at a cost basis of $30.90. This position is up 3.6%. Chipotle makes up 2.6% of the portfolio. Chipotle used to be the darling of the portfolio, but with rising prices and diminishing value proposition, I haven't had a clear outlook on the company. I need to see a little more growth to build out a full-size position. Last, let's look at the cash position. I have reduced the cash position to $427.96, or 23.1% of the portfolio. This is an improvement from February, when I held nearly $900 in cash. Most of that money went into Wingstop, but I still have some cash that I need to put to work. Ideally, I want to be fully invested at every month's end. A lot of my biggest holdings got wrecked this month. However, I still think we are investing in good companies. While we may not get all of the best growers in the portfolio, we are doing a good job of avoiding the crap. Still, I am looking forward to the Fed chair replacement and what that should mean for our more growth-oriented holdings. Many thanks for watching. What do you think about the portfolio performance? Share your thoughts below. It is always great to hear from you. Check out some more videos right now and don't forget to put your money where your mouth is.